Hi everyone, it's March 19th, 3:25 p.m. Pacific Time, 6:25 p.m. Eastern Time. What I'm going to do today is just go over the weekly and monthly charts for the tech stocks and see if there's any signs of a chart breakout or breakdown going into the last week of March and see if there's anything that we can anticipate in the month of April. Obviously, we had some pretty dire news about uh, financials taking a big beat. And as you may know, every time there's a horrible event in the markets, the next couple of months, the markets tend to rally and make new 52-week highs. That's kind of what we saw with COVID. That's what we saw back in the previous financial and tech crashes. And right now we're in the midst of another potential crash in the financials. Currently, the S&P futures are up zero point 0.4, so it doesn't seem like we're crashing on Monday. I'm going to start off with looking at Apple. Apple on the weekly looks like there's a bull flag, and then it's pushing right at the top of that weekly Darvish channel 155. If that happens, we can see a move to 177. That would give us a clue that the Apple stock is trying to move toward the psychological target of 200. On the monthly chart, we can see that there's a monthly TTM squeeze, and that usually entails, if this squeeze is favoring the bull run, that entails like 12 months of a rally to new 50 to several 52-week highs. And that's very auspicious for the US markets, regardless of the inflation, because inflation is now news in the past. I guess every single FOMC event with Jerome Powell speaking has will cause introduce volatility, and that could lead to buying opportunities and trading opportunities. But right now, if Apple, which is one of the largest companies in the world and one of the largest weightings in the index, if this happens to squeeze to the upside, look for another major bull run that is anticipated going into the end of the year and also into 2024. Adobe had pretty good earnings, I think, last week, and it does look like it's trying to consolidate here after the earnings beat, but they did leave a gap. So I think after the beat, there will be some sort of a consolidating period before it heads up to 400. Obviously, that's the psychological target that it attempted back here to break out in January, and it failed, pulled back, and now it's trying to recoup the and digest the news from earnings with that weekly TTM squeeze. Nothing on the monthly, so I don't think there's any significant breakout. However, it is looking like it's wanting to get back above that 50-month moving average at 414. AMD had a pretty big move. I guess that was probably due to the Bitcoin craze, where maybe demand for those GPU units have started to increase or possibly indicate further sales. And AMD had a massive run on that magic mic on the monthly candle, pushing it right back to that 21-month moving average at $100, $97, and the psychological target is obviously 100. Because of the big move in the month of March, I think AMD may rest a little bit and then proceed to run up and try to tag the previous 52-week high at 163. Amazon is showing a A7 TTM squeeze weekly. That is with a pretty strong move last week, due to, you can see that clearly on that bullish engulfing candle. And then at 103, if Amazon happens to break through this level, you're going to see the price of Amazon ride up this pole all the way up to 114. There's no psychological target other than the 100. I guess that's the breakout level, or the psychological breakout level, where buyers will start to jump in, and then it'll take it up to 130. That's a 30% move that can happen within 21 days on that TTM squeeze. I'm gonna skip this stock. I don't really monitor this Activision, so I probably should delete that. Boeing Yeah, Boeing's been a bit choppy. There's not much going on here in terms of TTM squeezes. Does look like it's overbought on the monthly and looking like it's consolidating on the weekly. So there's nothing really going on for that. Baba, likewise, there's not much of a squeeze. So I'm not really interested in any of these stocks that don't have a TTM squeeze on the weekly and monthly. Baidu has a monthly TTM squeeze. It did make a significant move last week, creating that doji. However, I'm not really into Chinese stocks, but I'll keep my eye on this one because it does have a monthly TTM squeeze, which is a significant signal. Coinbase, not much here. It looks like it just consolidated off the bottom, moving with Bitcoin. So my best guess here is the retest of that 141, but I'm not looking to jump into this stock because I'm not very familiar with this stock in general. S&P futures ripping up at zero point 0.6, so that's a pretty good sign. We can see that there's a TTM squeeze on the weekly. That's a significant signal, and it continues to make higher lows off of the October lows. Higher low here, higher low in December, and then another higher low in March. Every single attempt to push the market lower to make a lower low has failed, and that just improves the confidence of the TTM squeeze on the weekly to break out above 4,200. Keep in mind there's a gap at 4,225, and break out of that weekly Darvish channel to push through 4,300. My best guess is going to do that sooner than later with a trigger of the FOMC Wednesday that could provide enough momentum to ride this, to see the market just dump a whole bunch of money right into the markets, pushing this right up to 4,207. I don't see much on the monthly other than this. We have a monthly squeeze showing the orange dots. That's a slower squeeze, meaning that the momentum is not as sharp and robust as the red. I mean, the red is the default setting where the Bollinger Bands and the Kellner channels are contracting. Whereas the orange one, I'm not very familiar with the numerical coding of this one, but from my understanding, it's the squeeze is a little bit less in momentum and price action. The red ones are the ones that move with force and with relative speed. So as it's churning out and trying to push through that weekly 6-week moving average, it will get more and more choppy until once it hits the green dot. That's when the price of the S&P will start to accelerate and be a clear sign that it wants to move back above 4,200 sooner than later. I'm going to take a look quickly at gold here. Gold has been going up quite a bit. It does have a monthly, but that's a triple top to me on the monthly. So I think if everyone's like jumping into gold, yeah, there is a chance that it could end up becoming a monthly breakout and then maybe move up to the next psychological target, which is 3,000. That is something that can happen. If you're gonna trade this, because gold has such a negative connotation in the markets, and if it does break out, then a monthly, like something getting like cheap monthly contracts that expire in December with both the calls and the puts, just one contract on each end, and then just letting that ride to the end of that second or third monthly green dot, or the green cycle, third green cycle to 12, could pay out quite big and cover the cost on one of those legs on either on the call or put. So you can see that it's been consolidating for quite some time. Been trading in the 1,700 to maybe 2,000 range for since 2 years. So that's a 2-year base right there, looking to break out. So something to consider. That's a pretty big. That's a pretty long period for it to consolidate. So we're looking, in general, if we're going to be bullish on this, then on the monthly, then you want to buy contracts out to December and possibly into January 2024. Okay, so now I'm moving over to Meta. I did have some contracts last week. We caught a pretty decent move. However, it did pull back on Friday 4.55%. I've closed out all my positions. I'm flat with Meta. And it doesn't look like there's any squeeze here. And actually, the ginormous move that it had in the past 2 to 3 months, there was really no sign of a squeeze. It looks like more of a mean reversion after the cumulative delta volume bar moved outside of the lower end of that range. That's quite a that's the tail end. And then after the tail end where it moved well outside of those bands, it closed within the bands and started to mean revert. So now, because of the move, I don't see Meta really moving anywhere higher. It could end up consolidating first and then move up higher to retest the 52-week high that it made back here in August 2021. That's at 370, and then if it gets there, then look for 400. If I had to take a guess how long this would take, I would say by February 2024, Meta Platforms is going to reach up to 380 to 400. Okay, Microsoft. Microsoft is an amazing company. It's got amazing products for synergy in companies and communication tools, cloud services, and games. It's pretty much the dominant software and a hardware provider for all companies. And it does have a A7 weekly squeeze, so look for a retest of 340, and then if that is the case, then we're looking for a psychological target of 400. There is a softer squeeze here on the monthly, looking like it's going to retest that 341 and then break out to 400. Netflix. So Netflix, after its debacle last year, it dropped almost like 80%. It's kind of recovered here, but there's no real TTM squeeze. I'm not looking to get into Netflix anytime soon until there is a clear sign of a squeeze. There's better setups like Microsoft and Apple that you probably want to focus on. NASDAQ, it has that A7 that it's been kind of churning out, but quite choppy to say the least. But you can see that there's a well-defined weekly Darvish channel. 13,767 is the target. It did do something very similar to what AMD did on that Magic Mike with the BLT on the monthly. So not really sure, like that monthly candle seems like it's already exhausted. Could indicate that April could be a little bit of a pullback, or another monthly candle on April could push it right up to 13,425, which will coincide with the upper Darvish channel on the weekly. AMD, couldn't really see any TTM squeeze here on the weekly, and on the monthly looks more of like a mean reversion off of the monthly right here on September, and then right back to the mean on that monthly, and actually pushing right to the top of the upper band on the cumulative delta on the monthly. You can see that there is a well-defined monthly Darvish channel. So 346, which is a double top from the previous high in November 2021, is probable now, and that's probably where you want to be looking to close those positions if you're in NVIDIA, and maybe even short it at 337, as this is a double top. So that's a great opportunity to short at the 351, 350 level, because that's a double top. There's another double top here on the weekly at 339. So two opportunities to look for a double top in NVIDIA, but at the moment it looks like the path of least resistance is the double top levels at 339 or 346. So it's quite close to both. Okay, Roku, our beloved stock. This one has consolidated quite a bit. I mean, that doesn't have any, TTM squeeze that I can see. I I do see a chart pattern that is forming a bottom here, but it could end up dropping and breaking through that lower Darvish channel 36. If there's a 70-minute TTM squeeze on, nope, not even a 70-minute TTM squeeze. So I do not have any comments on Roku at the moment. Shopify looks exactly like Roku. So, I mean, Roku and Shopify, you can see that on the monthly 50-month moving average, there is a clear gap between the 8-month and the 15-month moving averages. So that could be a target for both Roku and Shopify, right? But the still no TTM squeeze, so I'm not, and also the stocks are quite, they're double digits, so I'm not looking to trade these with options. All right, Tesla. So Tesla, our beloved stock, our savior Elon Musk. Don't see anything really going on here on the weekly and the monthly. It does have a potential monthly move to the 21-month moving average of 261, but right now I don't see anything really of any sort of breakout that we saw last year with that weekly TTM squeeze. Nothing right now, so let this incubate for a little bit. Okay, so that's about it. I don't really have anything else other than the ones that I've mentioned. These are the ones that we trade the most. S&P is up quite a bit in the future, so that's pretty good news that the market's going to open up higher into Monday and Tuesday. So look for the market to open up positive at Monday. Let me see. Let's take a look at the economic report here. The economic calendar for next week, March 21st. So nothing scheduled. So most likely we'll see some sort of run up into March 22nd. And then we got a Fed interest rate decision. Maybe the debacle on the financials may have influenced the Fed or the markets to change their perception about the rate hikes. Maybe we get a pause. That's not going to be clear until things are said. So with Wednesdays are probably one of the worst trading days. And especially with Jerome Powell speaking, it looks like the market is front running here, up 0.67%. Let's take a look on the daily. We've got the A7 opening inside day, so that's a good sign that we're not moving lower. And I think on the 78-minute, no, there's not much, and it looks like the gap. Oh no, so the gap is still open here at 3,950. If the market continues to run up into Monday, then maybe Tuesday we get a very strong sell-off going into Wednesday, and then that would be enough to sell the market off to fill that gap at 3,951. And then the interest rate decision from 2 to 2:30, that's where the big move will happen post 2:30. That is my best guess. This is a Wednesday. This is probably, not sure exactly what's going to happen. These are pretty nasty tricks that the market can play into this. So for me, I think I'd be better off not to trade Wednesday. If I did, maybe I'd straddle. These events are very binary in nature. I think there's probably a better, once the news is out, and if the market rips higher on Wednesday, I think shorting Thursday, having puts open Wednesday at 3:59 p.m. Eastern time, so that's 1 minute before the market close, would not be a bad idea, because generally the markets tend to sell off when Jerome Powell rips the market higher. If the opposite happens, then I would wait till the gap, see where how much more there is room to the downside for this gap to fill at 3,950. Um, yeah, this doesn't look like it's a sustainable rally, even though it's up quite a bit at 0.68%. That gap will get filled probably by Wednesday. So they left a gap open just for those, just to get to mess around with the charts. All right, so thank you very much and have a great rest of your day.